Welcome to TalkTickers, your deep dive into the most impactful earnings calls. Today we're digging into Advantest. They just had their Q1 Fiscal 2026 earnings call. And they're a really critical player in semiconductor testing, right? Especially with this whole AI boom. Their latest numbers really make you wonder, is this company changing, moving beyond just being cyclical, maybe becoming this key enabler for AI growth?
That's exactly the question, isn't it?
Yeah.
And that's what we're going to explore. We'll walk you through the big numbers, what management's saying strategically, and what it might signal for the whole semiconductor space. It's about connecting the dots, really. Seeing how one company's great quarter reflects these huge industry shifts, especially around AI.
Okay, let's jump right in then. The headline numbers. I mean, Advantest didn't just beat expectations. They absolutely smashed them. These results are, frankly, stunning.
You're not wrong. They set new records pretty much across the board. We're talking record quarterly sales, record operating income, record net income. To put a number on it, basic earnings per share hit 122.80.
Yeah.
Way, way above what analysts were expecting.
Just incredible.
It wasn't just a little beat. It was a really strong signal financially.
And the sales figure itself, $263.8 billion in net sales. It's a 90% increase year over year. 90%.
Yeah.
That's huge growth for a company this size and way ahead of forecasts. It really suggests something fundamental is shifting in their market.
And the profit story is maybe even better. That operating income, $123.95 billion, which translates to, get this, a 47% operating margin. 47%.
Wow.
Think about that. Nearly half of every yen in sales turning into operating profit.
Yeah.
In this industry, with all the R&D and CapEx. That kind of margin shows incredible profitability, yes, but also really sharp execution and serious pricing power.
Yeah, 47% is just exceptional.
It's more than just a strong quarter. It shows their business model is really clicking right now.
Okay, so unpacking that, these numbers are fantastic. But what's the story behind them? What did management point to as the key reasons for this kind of explosive growth?
Well, they were pretty direct about it. The phrase they kept using was elevated demand for AI-related applications exceeding initial expectations. And the key thing here is they don't see this as just another tech cycle bump, like we saw with PCs or smartphones.
Right.
They see it as a structural shift. AI just has this relentless growing need for super advanced chips, specialized memory, and that creates a completely different demand pattern for testing. It's more continuous, more complex.
So Advantest is positioned perfectly for that.
Exactly. It potentially makes them less tied to those old boom and bust cycles, at least in this high-end AI segment. Management basically said, look, other areas like auto and industrial are okay, maybe a bit soft, but AI isn't just a driver. It's the main engine right now, and it's accelerating.
Okay, so if AI demand is that strong and exceeding their own expectations, how did that translate into their outlook? Did they raise guidance?
Oh, absolutely, and significantly. They boosted their full-year forecast pretty much everywhere. Net sales projection is now $835 billion, operating income $300 billion, net income $221.5 billion.
Big jumps.
Yeah, and basic EPS guidance was also revised way up to 302.71. It shows real confidence that this AI momentum isn't just a one-quarter thing. They see it continuing.
That's a strong signal, but let's break it down a bit more. Where exactly is the strength coming from within their business? Is it across the board or more focused?
It's definitely focused, and that's really important. They updated their view for the SoC system on chip tester market. They now see that at $5.7 to $6.3 billion for calendar 2025.
Okay.
That implies something like 46% year-over-year growth. That's huge.
And that's the AI chips, right? The complex.
Precisely. That's where the action is: AI accelerators, high-performance computing. Now, contrast that with the memory tester market. It's still strong historically, but they see it as basically flat for the year, around $1.7 to $2.2 billion.
Interesting difference.
Yeah. So overall, they expect the whole semiconductor tester market to grow maybe 33% year over year in 2025. But yeah, it's clear that SoC testers are really driving the growth, fueled by these advanced AI chip demands.
That focus on SoC really highlights the AI impact. But back to that margin, that 47%. How did they manage that? It's not just sales volume, is it? What did management say about operational execution?
Right, that's the other side of the coin. How do you convert those sales so profitably? Management pointed to a few things. First, definitely economies of scale. Higher sales volumes help absorb fixed costs. They also mentioned some demand pull-ins, customers wanting testers sooner rather than later.
Okay.
Second, a really favorable product mix. They're selling more of those high-margin, complex SoC testers. Third, just disciplined cost control, keeping expenses in check. They also noted there weren't any big one-off losses hitting the numbers this quarter. And critically, they're benefiting from past investments in capacity. They could actually meet this demand surge efficiently.
That foresight paid off.
Seems like it. Oh, and one more thing they mentioned, selling off part of their services business. That added about $2.5 billion to segment income. Suggests they're strategically trimming and focusing on the core high-growth stuff, optimizing for profit.
Okay, makes sense.
Yeah.
But they also mentioned something that sounded a bit contradictory, this temporary digestion period for stock testers in the second half of the fiscal year. How does that fit with this super bullish AI story?
Yeah, that's a really important nuance, and good on them for being transparent about it. Basically, while the long-term trend is strong, they expect some unevenness, some lumpiness in the second half of this fiscal year. It's tied to the timing of when their customers transition to the next generation of AI chips.
Ah, okay. So it's not that demand is weakening.
Exactly. It's more like, think about chip development. It's not perfectly smooth. There's design, testing, then maybe a pause while the chip maker gets ready for the next big thing, retools, refine.
There are development cycles.
Precisely. So this digestion is likely that pause as major customers gear up for even more advanced AI architectures down the road. They were very clear they expect growth to strongly reaccelerate in fiscal 2026.
So they see it as just a temporary blip related to customer schedules?
That's the message. It actually signals confidence in the long-term AI complexity trend because it's about preparing for the next wave.
Got it. And speaking of meeting demand, what about their actual production capacity? If things are set to reaccelerate, can they keep up?
They addressed that directly, said they've already expanded capacity significantly about 3 times over the last few years.
3 times, okay.
Yeah, which clearly helped them handle this recent surge and shortened lead times. And looking forward, they're planning another major expansion. They talked about boosting capacity by more than 70% compared to fiscal 2024 levels.
Wow.
They see the semiconductor market heading towards $1 trillion, and they want to be ready. They're working with partners, building strategic inventory, basically doing everything to avoid becoming a bottleneck.
That's serious commitment to future growth.
It really underscores their belief that this AI demand isn't just a short-term spike.
And didn't they also change how they report their business segments? Does that give us any near insights?
They did, yeah. Streamlined it from 3 segments down to 2, starting this fiscal year. Now you basically got the test systems business that includes SOS, memory, handlers, interfaces, system-level test, all the core equipment, and then services and other support, nanotechnology, consumables like test sockets.
So cleaner categories.
Right. It lumps the main hardware together. And within that test system segment, SOS testers were the star, hitting $191.3 billion in sales, driven by HPC and AI chips. And interestingly, a lot of growth was in Taiwan.
Taiwan, okay. Why specifically?
Mostly for quality assurance testing on those high-end chips designed by U.S. fabless companies, the ones who design but don't manufacture.
Like NVIDIA, AMD.
Yeah.
Sending chips to TSMC.
Exactly. Those chips need rigorous testing, and Advantest provides the equipment. It just highlights how essential they are in that global supply chain for the most advanced AI silicon.
Okay, so phenomenal results, strong guidance, with a bit of near-term nuance, clear AI focus. How did the market react, and what should listeners be thinking about this from an investment angle?
Well, the day after the report, their ADR, the stock traded in the U.S., was up about 4.7%, and around $3.30 per share.
So positive, but maybe not a massive explosion.
Right, a positive response. Definitely appreciated the strong numbers and outlook, but perhaps a bit measured. Maybe the market was digesting that digestion period guidance too, factoring in the potential near-term lumpiness.
Makes sense. So zooming out again, how does this Advantest performance fit into the bigger AI semiconductor story we keep hearing about?
I think it strongly validates it. It shows the acceleration is real. As companies push the boundaries with AI chips, needing more complex SOCs and crucial high bandwidth memory, or HBM.
Right. HBM testing is key too.
Absolutely. The demand for high-end testing just escalates. Advantest is really becoming critical infrastructure for this whole AI build-out. You know the old saying about selling picks and shovels during a gold rush? They're providing the really advanced, essential picks and shovels for the AI silicon gold rush. And analyst sentiment reflects that. Mostly bullish, lots of buy ratings. They see the strategic position.
Management seemed very confident about the sustainability of this AI demand. Are there specific things we should watch for, catalysts maybe, that would support that view going forward?
Yeah, definitely. First, their next earnings report, Q2 results, likely coming in October. That will give us an update on how that digestion period is playing out in the outlook into 2026. Also, watch for news about them deploying new emerging test products at customer sites. Any big contract announcements from major chip makers expanding their AI capacity, and just generally tracking the overall pace of the global AI build-out.
And keep an eye on that SOG tester market growth number.
Absolutely. That remains the core engine. You can really see the company trying to shift the narrative,
Right.
from being seen as just another cyclical equipment maker.
To being a strategic partner enabling the whole AI scale-up.
Exactly. Those catalysts will either strengthen or challenge that evolving story.
Okay, great insights. Now, let's shift gears to our final segment. Time for that audacious idea, with the very important reminder. This is not financial advice, purely for discussion and educational purposes.
Always. Do your own homework, talk to a pro. Okay, so here's a thought really leading into what management said. They gave us this specific timeline, right? Temporary digestion in late fiscal 25, then strong reacceleration in fiscal 26. So the audacious idea spins off that. What if Advantest isn't just benefiting from AI, but they're actually becoming structurally less cyclical because of AI? The complexity, the scale, the necessity of testing these next-gen AI chips might be giving them a much wider competitive moat, much stronger pricing power than they've historically had.
So the idea is that the AI testing demand is fundamentally different, less prone to booms and busts.
Potentially, yes, at least at this very high end. The bet would be that their role becomes so indispensable that their business model fundamentally changes, becoming more stable, higher growth, less tied to those old cycles. This could mean the stock deserves a complete re-rating by the market, moving beyond that cyclical equipment label.
Interesting. So the audacious play isn't just buy because AI, it's buy because Advantest's role in AI is changing its fundamental nature.
Exactly. And maybe, just maybe, you could use any market dips related to that near-term digestion period as an opportunity if you believe in that longer-term structural transformation story management is telling. It's a bet on the quality of their business improving permanently because of AI.
A bold thought, definitely playing the long game based on their strategic positioning. Well, this deep dive into Advantest's Q1 call has been fascinating. It really shows a company firing on all cylinders, riding that massive AI wave.
Yeah, it really does. Impressive numbers, boosted guidance, a clear strategy focused on AI, capacity expansion, and even their acknowledgement of that near-term pause reinforces their confidence in the next waves of growth for fiscal 2026. It paints a picture of a company deeply embedded in the future of AI.
A compelling story, for sure. A real look at an infrastructure provider for the AI era. And just one more reminder, everything we've discussed here on TalkTickers is for informational and educational purposes only. It is definitely not financial advice.
Please, always do your own research. Consult with a qualified financial professional before making any investment decisions.
Thanks for joining us on TalkTickers. What did you find most interesting in Advantest's call? What does their performance signal to you about semiconductors or AI? Let us know what you think. We'll be back soon with another earnings call deep dive.